Investors have suddenly discovered the JM FlexiCap fund. A year ago, the fund size was about 640 crores. Today, it's massive 4,500 crores. That's a growth of 600%. Even more shocking is the 2-year growth. In September 2022, JM FlexiCap's assets under management were just 226 crores. Since then, they have grown 1,900%. Now, we all know investors chase performance. So if investors are pouring money into JM FlexiCap fund, its performance must have improved. In 2023, JM FlexiCap fund generated a return of 41.55%. Its benchmark Nifty 500 was up 26.91%. The fund also did far better than the FlexiCap category, which had average returns of 28.8%. Now that's an impressive performance. The story is the same for 2024. But the story of JM FlexiCap is similar to that of a below average student suddenly becoming the class topper. Historically, the fund's performance has been nothing impressive. So what caused this dramatic shift in the fund's performance? Was it a change in strategy, market conditions, or something entirely different? We will explore all of this in today's video. Hello and welcome to ET Money's YouTube channel. In this video, we will examine the JM FlexiCap fund in depth and uncover the reasons behind its impressive turnaround. First, we will analyze this fund's investment style. Then, we will analyze how the changes in investment style have affected the fund's performance. And lastly, we will see if this fund can be a promising FlexiCap candidate for your portfolio. Now, if you are a mutual fund investor, this video will be helpful. I recommend that you watch it until the end. But before we begin, here's a quick update. This video is part of our fund review playlist. Till now, we have made more than 20 videos analyzing different mutual funds and categories. I'm sure you will find much value in the playlist, so I recommend you check it out. I've attached its link in the description box below. Okay, let's start by examining the investment style of the fund and analyzing the changes that the fund managers have made. Now, this fund was launched in 2008 as JM Multi-Cap Strategy Fund and renamed JM Multi-Cap in 2018. 2 years later, the name was again changed to JM FlexiCap. However, the fund's mandate didn't drastically change. Let's look at the change in fund managers of JM FlexiCap. Usually, we see a shift in a scheme's performance after a change in the fund manager. For the first 13 years, Sanjay Chhabria was the fund manager. But in 2021, Satish Ramanathan took over. The fund's performance has improved since then. Now let's understand the investment style of the new fund manager and his team. So there are 3 different metrics that we will look at while evaluating the investment style. First, we will analyze the fund's market cap allocation data. Then, we will look at the number of stocks the fund manager prefers to hold in the portfolio. And lastly, we will analyze the fund's portfolio turnover ratio and see if the fund manager follows a buy and hold strategy or churns his portfolio frequently. Together, these 3 metrics will help us gauge the investment style of the scheme. So, let's start by looking at the market cap allocation. FlexiCap funds have a lot of freedom. They can hold large cap, mid cap, small cap stocks in any proportion they like. Now, this freedom helps fund managers allocate more to the segment they think will outperform. For example, if they think small caps are available at reasonable valuations, they can invest more in small caps. Similarly, they can shift their allocation to large caps if we think mid and small caps will underperform. Now, a higher allocation to mid and small caps could generate better returns in the current markets, but this could make the fund more volatile. A higher allocation to large caps could mean different things. It could mean the fund manager thinks valuations are expensive in mid and small cap segments, or he just wants to stick to quality companies. This could result in lower returns if mid and small caps do well. Now, each fund manager perceives value differently. Due to this, the allocation to large, mid and small caps varies from one FlexiCap fund to another. Analyzing the market cap allocation tells us about the fund manager's style. Now, at the end of September, JM FlexiCap fund had a large cap allocation of 44.6%, a mid cap allocation of around 16%, and a small cap allocation of around 39%. So more than 50% of its assets are invested in mid and small cap stocks. Historically, the fund has been heavily invested in large cap stocks. In September 2020, its large cap allocation was 73.2%, and it had zero allocation to small caps. But since then, the fund has increased its small cap allocation significantly, reducing exposure to large caps. This is probably the changes the new fund management team made to the portfolio. Alright, now let's compare the fund's market cap allocation with the category average of flexi-cap funds. We can see that this trend of increasing small cap allocation and decreasing large cap allocation is visible across the category. But the magnitude of change done by JM FlexiCap fund is much higher than the category average. This increased small cap allocation by the fund could be one of the factors behind the improved returns. Now, another thing to note is the fund's cash and debt holdings compared to the category average. About 1% of the fund's assets are liquid. The category average stands at 6.4%. Now, this can also contribute to better performance as a higher percentage of funds' assets are invested in the market. However, this can also backfire if markets correct. The fund could see a higher fall than its peers. Next, let's look at the number of stocks in the fund's portfolio. The number of stocks in a fund's portfolio tells us whether the fund manager has a concentrated or diversified portfolio. If the number of stocks in the portfolio is low, it qualifies as a concentrated portfolio. In such cases, the share of every stock in the portfolio is high, and a big move in any of the stocks can easily impact the fund's overall returns. This leads to both a higher upside and a higher downside. Now, if a portfolio has a high number of stocks, it implies a diversified portfolio. In this case, the allocation to any single stock is relatively low. So a single stock will not significantly impact the portfolio's returns. Now, the number of stocks in the JM FlexiCap's portfolio has increased. The fund had 25 stocks as of March 2020 and 65 stocks as of September 2024. Now, this shows that the fund manager has created a well-diversified portfolio. Usually, as the fund grows in size, the number of stocks also rises, helping to spread the risk. Next, let's move to our third metric and see if the fund manager churns the portfolio more frequently. For this, we looked at the metric called portfolio turnover ratio. It tells us how frequently the fund manager buys or sells stocks in the portfolio. A ratio of more than 100 indicates that the entire portfolio was churned in the past year. So if a fund has a high turnover ratio, it could mean that the fund manager follows a momentum investing style. Now, in this style, the fund manager invests in stocks with positive price momentum and moves out when they lose momentum. This frequent buying and selling leads to a higher portfolio turnover ratio. Conversely, a low fund portfolio turnover ratio implies a buy and hold style of fund management. Now, as of August 2024, the portfolio turnover ratio of this fund stood at 132. This is on the higher side and shows that the fund manager is not following the buy and hold strategy. If we look at the historical trend, the fund's portfolio turnover ratio in August 2021 was 62.57. Since then, it has gone up. Now, this churn could be the reason for better returns if the fund manager follows the momentum investing style. Momentum has been a top performing investment strategy in the past 2 years. Let's understand this by looking at a few stocks from the fund's portfolio. The fund manager invested in ONGC in January 2024 and exited the stock in February 2024. During this period, the stock generated a return of around 29%. Similarly, the fund manager invested in Linde India in March 2024 and exited the stock in about 4 months. During this period, the stock generated a return of around 52%. Now, there are many such examples of stocks where the fund manager invested briefly to capture the upside. So, if we summarize our findings, then the fund's high small cap holding, low cash allocation, and momentum investment style appear to be key factors behind the scheme's improved performance. Now, let's look at the fund's performance. To evaluate the returns performance, we will look at 3 metrics: trailing returns, rolling returns, and the periodic returns of the fund. First, let's look at the fund's trailing returns. Now, we looked at the fund's 1, 3, 5, and 10-year trailing returns and compared them to the category average and the fund's benchmark. The fund has outperformed the category average and its benchmark in all time frames. The fund ranks among the top 2 schemes in the category based on trailing returns. The fund has done well across all time frames. Next, we looked at the fund's periodic returns. In the last 3 years, JM FlexiCap fund has consistently performed better than its peers and the benchmark. Its rankings in the category has also improved in the last 3 years. Before 2022, the fund's performance was sporadic. During some periods, it underperformed, and during others, it outperformed. The fund's increased exposure to small caps and momentum investing style could be the reason behind this consistent outperformance. Now, to look at the consistency of returns, we looked at the fund's 5-year rolling returns between 1st January 2013 and 8th October 2024. The 5-year average rolling return stood at 16.5%. The category average during the period was 14.7%, and the Nifty 500 generated a returns of 14.37%. So return-wise, the fund's consistent outperformance in the last 4 years has helped it generate a better long-term return than its peers. Next, let's see how well the fund can contain its downside. For this, we looked at the periods when Nifty 500 TRI corrected by more than 5% since 2013. We came across 31 such periods. Then, we mapped the performance of the FlexiCap category and JM FlexiCap fund during these periods. We wanted to see in how many periods JM FlexiCap fund fell less than the benchmark and the category average. Of the 31 periods, the fund had a better downside in just 7. In 11 periods, its downside was in line with the benchmark and category, and in 13 periods, it fell more than the benchmark. Now, based on this data, the fund doesn't appear to have good downside protection. It's more volatile than both the benchmark and its FlexiCap peers. Now, let's move to the final section of this video and see if this can be a promising FlexiCap candidate for your portfolio. Beyond the changes in the investment style we have just discussed, I would like to mention 2 more critical points here. The first is the fund's AUM. As of September 2024, the fund's AUM stood at 4,531 crores. This size is relatively smaller than other popular funds in the category. For instance, Parag Parikh FlexiCap fund stands at 82,441 crores. This smaller AUM can work to the fund's advantage. It allows the fund manager to allocate money to small and mid-cap stocks easily. In contrast, funds with larger AUMs often face challenges deploying their assets into mid and small cap stocks due to their sheer size. If we look at the 3 largest FlexiCap funds, all of them are large cap savvy. So from an AUM perspective, this could be a positive for the fund. The second point is that different investing styles work during different market phases. Momentum has been a top performing strategy in recent years, but it has had periods of underperformance. Now, with the current market valuations, many fund managers have already begun adopting more defensive positions in their portfolios. It will be interesting to see if the fund manager sticks to momentum or changes the investing style based on the new market conditions. You can definitely add this fund to your watch list and track its performance. Now, if you want to know what India's top fund managers are doing in their portfolios, we have covered that in our latest video. I recommend that you check that out. I've attached its link in the description section below. And with this, we have come to the end of this video. I hope you found this video useful. And if you did, please don't forget to share it with your friends and family. I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.